Next up, I'd like to introduce Equinox Gold, a Canadian gold mining company operating in the Americas with 6 operating gold mines and a mine being commissioned, with a clear path to achieve more than 1 million ounces. Please help me welcome CEO Christian Milau. And before I go, has anyone ever said to you that your last name is basically your mission statement? Million AU, unless I've spelled it wrong.
Nice. That's clever. So first of all, full disclosure, I am not Christian Milau. I'm actually Peter Hardie. I'm filling in for him at the last minute. I'm the Chief Financial Officer of Equinox Gold. No,
welcome.
Thank you.
Very much.
I'll tell him that, though. I don't think anyone's ever mentioned that. We're expecting Carrie Smith, and I think we're maybe 5 minutes early. So can we take a quick 5-minute break? Wait for him to arrive? Is that right? So we'll reconvene in 5 if that's okay. Thank you.
Well, I'm going to take over for Carrie because we can't find him. So you have a seat and I'll do a few questions.
Sure.
How about that?
Sure.
So first of all, introduce yourself to the audience and exactly what your role is with the company, how long you've been there. Give us a little background about you.
Thanks. My name is Peter Hardie. I'm the CFO of Equinox Gold. I've been with the company, since inception in 2016, when Christian and I and a few of our other colleagues started up, took over management of what was then Luna Gold, which eventually turned into Equinox Gold under Ross Speedy's leadership.
Excellent. And Ross, by the way, was going to be here with us, but I believe he's off canoeing somewhere, is he not? Up in the north?
Sounds like a Ross thing to do.
Yeah.
I think that's what he's doing,
Yeah. Anyways, we hope to see him here next year. And so tell us a little bit about your projects and exactly where they are. We know they're in South America,
sure. And sorry, I don't have the clicker, and I can move that forward.
Oh, there you go.
Sure. So we have 6 operating mines. 1 mine that's in commissioning, we just recently construction of, and 1 mine that's under construction in Canada. So those mines are located in Canada, the U.S., 2 in the U.S., 1 large mine complex, Los Feliz Mine in Mexico, and then the 3 operating mines and the 1 mine that's in commissioning in Brazil. I can work my way north to south on that. So in Canada, we have the Greenstone project that we acquired not too long ago from Premier Gold. We announced construction on that in Q4 of last year, and the construction period should take us through 2023, and then with commissioning and ramp up to follow in 2024. In the U.S., we have our Mesquite Mine. One of our former COOs referred to the Mesquite Mine as one of the grand dames of gold mining. It's been continuously operating for, I think, 3 and a bit decades now. We acquired it in 2018. It had 2 to 3 years of mine life when we acquired it, and 3 to 4 years of residual leach. And it still has 2 to 3 years of mine life left in it, and 3 to 4 years of residual leach. Take care.
And here he is, the man of the hour.
I thought it was at 11. Did I miss my appointment?
No, we're actually a little early.
Oh,
so you're good.
So we're just working through the mines.
Okay, sorry.
I warmed him up for you.
Yeah.
Okay, good.
Sean.
So sorry, I apologize to everybody. I was around. I was just out there chatting. So have you kind of gone through a bit of an overview, or how do you want to do this?
We're just working through our projects.
Okay, sure. Let's do that then.
Yeah, keep going.
Sure.
Yeah, so we have our Mesquite mine. It does about 130,000 ounces a year, and we look to continue to explore there and add to mine life. The Castle Mountain mine, it's our smallest mine. It does 25,000 to 30,000 ounces a year. We've recently submitted a permit amendment at that mine to expand production to 200,000 ounces a year. And we think that permitting process will take up to 3 years, and we submitted it from the time it was submitted in March. In Mexico, we have the Los Filos mine. That's an ex-Gold Corp project. It does about 160,000 to 180,000 ounces a year. Again, we're looking to expand production there over time by building, it's a large-scale heap leach mine, as is the Mesquite mine. And we look forward to building eventually a gold processing plant there that will allow us to expand production by about another 100,000 ounces a year. But that we think that'll be several quarters from now. In Brazil, we can start with Santa Luz. That's the mine where we just completed construction. It first poured gold at the end of Q1. And is now, construction is complete. We're in the process of ramping it up and working towards commercial production. It's a resin and leach plant, which is rare in gold, but the mineral body, it's an old Yamana mine that has a high degree of carbonaceous in the ore. And so we built the resin and leach plant with the goal of recovering about 84% there. And early indications that it's actually working quite well. So we're looking forward to working out tweaking the system that takes place during commissioning and having it fully up and running in Q3. We also have our Orizona Mine in Brazil. It does about 130,000 ounces a year. That was an old Luna Gold property that we rebuilt in 2019, and it'll be our largest mine in Brazil in time. We're in the process of completing a feasibility there, underground feasibility. And look forward to expand that mine production through the underground moving forward. And then our last two mines are the Fazenda mine and the RDM mine. And between the two, they both do about, call it 50,000 to 60,000 ounces a year. So that's an overview of our projects. As you can hear from the description, we'll do a little over 625,000 ounces this year at an all-in sustaining, call it in the mid-1300s to low 1400s. We're investing in our properties to bring that down. We think we've got the best development pipeline in the business and a clear path towards 1 million ounces of production per year. So that's an overview of the company and of our projects.
So, Peter, maybe we can kind of do this a little bit more interactive,
Sure.
Perhaps. I mean, I follow this company, and they have grown very quickly from literally, the company didn't exist in 2018, maybe, let's say.
Yep.
And started with Orizona, and then have added all these assets. So it's grown very quickly. And what's super topical today is inflation. Obviously, you guys are building a bunch of projects. You have, everybody's got inflationary trends. What are you trying to do to manage that? You're probably the best guy to talk about that as the CFO.
Yeah, it's a great question. I'll start with Greenstone. We experienced this rise in inflation early in Brazil, I think in advance really of where the rest of the world was seeing it. And it didn't come as a trickle, it actually came as a wall. And so we started putting in place measures in Brazil to try and contain it somewhat. Obviously, it's a massive rising tide that's affecting everybody, so you mitigate as much as you can. But with respect to Greenstone, that early view into inflation allowed us to do several things. One of the main ones was actually to, even in advance of announcing our construction officially, was to get in place the orders for all our long lead items and all our significant packages. And we did that at the end of Q2 through Q3 and into Q4 last year. So when we actually announced construction, we actually had committed quite a bit of the cost on that project and fixed a significant amount of the cost as well. Today we're over 50% committed. We've got 30% of the cost fixed. So with respect to that project, things are going well. With respect to our operations, because we were seeing that early in Brazil, we plan for inflation. Our guidance includes inflation in it, or our expectations on inflation for the year in it when we released it in January this year. And the other thing we're doing is now that we're a bigger company, we're leveraging our scale, A, to bring down our prices, and B, to ensure that we're securing supply. Obviously, a big part of the cost escalation is coming from supply chain issues, and having that increased scale, gives us a better ability to secure that supply at a little bit cheaper prices than maybe some of our competitors.
And for Greenstone, maybe you could just talk to the audience about the capital cost. There is a pretty large contingency built into that cost, obviously, and as you say, you're 50% committed, 30% spent. Maybe you can just give people the gross numbers so they have a sense for that project.
Sure. So we own 60% of Greenstone. Our partner on Greenstone is Orion Mine Finance, who have the other 40%. A wonderful partner and obviously extremely well backed. The total project budget is a little over $1.2 billion US. And like I say, we're currently on budget and on schedule. It is early days, but we have full intention of delivering this project on budget and on schedule.
And I think the contingency, if I remember, was $170 million, I want to say.
Yeah, that's right. It was 14%, I think, of the overall budget.
Right.
Yeah.
So a pretty healthy contingency for a project that's got most of the detailed engineering done, obviously, now.
Yeah, well, it's perhaps not a deliberate inflation containment measure, but the detailed engineering was very advanced at the time of project construction announcement, 85%. It's effectively complete now. We benefit, obviously, in two major ways from that. A, it prevents scope surprises with respect to construction, which is a big part of cost containment, obviously. And the second thing it does is it allows us to, accurately predict quantities and, as I was mentioning earlier, get the ordering done early.
And the other thing that's key in building a new project, obviously, is the team. And you may want to just talk about the team that's in place there at Greenstone, because they are pretty skilled and they've been around and they've built a number of projects.
Yeah, thanks. So if you have a chance to meet him, Eric Lamontagne, who leads the Greenstone project, he's here at the conference today. And if you get a chance to say hi, I highly encourage doing so. Him and his team, they're experienced cold weather builders. They've built mines for Agnico in the past. They've been on this project for 10 years, and it gives us, when we work with them, when you interact with them, it just gives you a huge sense of, frankly, confidence that they've got their arms fully around this project with respect to cost and schedule and what needs to be done.
I mean, people focus on sort of the negative, the cost overrun projects, particularly in Ontario, and you've had Cote Lake, obviously, you've had Magino, which is Argonaut, and so I know it does come up a lot in discussions with people about cost overruns, and there's a sensitivity to it, but even just today, Fortuna put out an update on Seguela, and they're on schedule and on budget. It's not $1 billion project, but it's $150 million project. So I think for every project that is over budget, I think there's projects that can deliver in a timely fashion on budget.
Yeah.
And you guys so far seem to be doing that, so that's great.
Yeah, thank you. Yeah, perhaps the ones that are successful don't get quite as much attention or headlines as the ones that aren't, but yeah, I was saying earlier, we're very focused on execution right now. We've grown the company quickly through M&A, but now, we've built like I say, we think the peer leading pipeline for development and growth. So that phase of company building for the time being is done, and we just need to focus on execution, lowering costs at our existing mine sites and delivering on Greenstone.
And you show on the slide the 6 operating mines. You had a couple more that you did sell, Mercedes and Pilar. So with the portfolio you've got, how do you see the portfolio changing over the next 5 years? Are there other assets that might get sold? Are you happy with the portfolio? I mean, you've got a pretty good development pipeline, obviously, so probably you could maybe sell a couple of smaller assets at some point, possibly.
We're significant, as the senior management. Russ Beatty's our principal shareholder, and as the senior management of the company is actually heavily invested at market, I'll add, in the company. So we're very well aligned with shareholders in our decision making, because when the company benefits, we benefit. And our view is big quality projects should be the ultimate aim of really any company. And as you see with our acquisition of Premier and the addition of the Greenstone mine, which will be the 3rd or 4th largest gold mine in Canada once it's up and running, we think that's the best, most efficient way to actually deliver value Currently, we're happy with our asset portfolio, but we're always looking to optimize. As you see with our recent spin out of some of the royalties, we just didn't feel like, into Sandbox, we didn't feel like they were getting any value or even visible within our current portfolio. So we're always also reviewing our asset portfolio and trying to optimize it. But for the time being, with respect to our operating assets, we're happy.
Okay. Yeah. And I probably should point out with Greenstone, when they acquired Premier, that gave them 50% of the asset, and then they did a subsequent transaction with Orion Mine Finance to buy another 10%. So that got to the 60-40 split that we have today. Yeah. And you talked a bit about Santa Luz, which is obviously your kind of next project. It's, you know, you've poured first gold there. How is that ramp up going?
Yeah, it's going well. As I mentioned, it's a novel application of a technology that's used from my understanding, in base metal. But yeah, it's going well. Basically, I would call it as planned, and we look forward to it. You know, the tweaking that's taking place, continuing, and then completing ramp up and full commercial production in Q3. Yeah.
Right. Okay. And for those that don't know, Fazenda and Santa Luz are kind of on this greenstone trend in Brazil. They're, I don't know, maybe 70 kilometers apart, and Equinox owns the entire land package between the two operations. Can you talk a bit about the Expiration, because I think that probably could be a nice catalyst over the next few years as you manage to do some work on that land package? Yeah,
so we refer to that as the Bahia District, and it's as the crow flies, the prospective area that exists between the two mines. We've got lots to build and work on right now, but of course, as we look forward, we will want to continue to grow the company. And the Bahia District, our exploration team is really excited about it. Highly prospective. One of the advantages we have of having, a traditional CIL at Fazenda and the resin leach process at Santa Luz is, depending, what you find, you have the opportunity perhaps to shunt it one way or the other, or make a brand new discovery in and of itself in that district.
Mm-hmm. And how much capital would you commit to exploration in that belt then on an annual basis, do you think? Will it be sort of similar to what you've committed this year on a go-forward basis?
Yeah, we're committing about 40 to 50 million in total to exploration each year right now, and we'll continue to do that. Of course, success breeds success in exploration. From our side, we're always very happy. I shouldn't say this as CFO. We're always super happy to fund exploration, though, because success in exploration breeds success. By far, the cheapest growth comes from your own drill bit. Drilling your own properties, and especially if it's in and around your own mine sites. So we're happy. We're actually quite happy to allocate capital to exploration when we have success.
Right. And perhaps I know I don't think you showed the slide on your balance sheet, but maybe you can just talk about the balance sheet, because that's another question that obviously does come up. The funding for Greenstone primarily now, and then it'll be Los Filos Mill, and then I guess you'd have Castle Mountain Phase 2 after that.
Yeah, so first of all, I'll say that we're sequencing our projects one after the other. At least internally, that's the plan, which allows for managing that capital easier. But yeah, we've got a strong balance sheet. You can see it kind of in that one square further down to the right. 465 million in total liquidity when you include our investments. We've got cash in the bank. We've got available lines on our credit facilities. We're also in the process of refinancing our credit facilities, hoping to expand and extend them with our lending syndicate. And then we have levers on our investments that we can pull as well if needed. But and the final leg, of course, on the table is funding through cash flow. We have our operations; they're profitable, and can fund that development through operations.
Right. And just so people are aware, the investment portfolio includes a pretty large position in Solaris, which is a copper exploration company in Ecuador, and then I-80 Gold, which was created from the spin out, obviously. So those are the two positions, and I'm not sure. I think it's about $250 million US today.
Yeah, about that. Yeah,
roughly in terms of market value. So, and the company did sell some of the Solaris shares. I don't know, 18 months ago, maybe 12 months ago.
Yeah, I think it was in October.
You sold
2020. Yeah.
So that's the source of cash, obviously. Okay, is there anybody that might have a question for Peter? I think he's probably the first CFO we've had up here on my panel anyhow, so. Okay, no. Okay, well, that's great. Thank you very much, Peter. Appreciate it.
Thanks, Gary. Thanks for your time.
Thank you.